If you own your own home, every year you spend several $1,000s on taxes just because you own a home. And that's true of most middle class Americans. They send several $1,000s to the state, the county, and the city in the form of a tax on their largest source of wealth, which is their home. 60% of American families own their own homes. And for well over 90% of them, that's their major source of wealth. And every year, that wealth gets taxed. The IRS calls that property taxes. And that wealth is generally less than $500,000. That's it. On the other hand, if your major pool of wealth is $500 million in stock you own, you don't pay any tax on those $500 million you own. So if you have $500 million in investment, you don't pay any tax. But if you have $500,000 in a house, you pay taxes. $500 million in investment, no tax. $500 million in a house, heavily taxed. Every middle class homeowner family in America is paying a wealth tax every year. And that's not a small tax. It's not a 0.5% or a 1%. In some cases, it's 5, 6, 8, 10% wealth tax. So if you have $500,000 of your wealth invested in a house, you pay up to 10% just by being wealthy. On the other hand, if you have the same amount of money, $500,000 invested in share, you don't pay any taxes. On top of that, if your investment gives you dividends, and those dividends might be thousands or hundreds of thousands of dollars of revenue each year, your maximum tax is 20%. But if you make $500,000 in wages or more, you are taxed at 37%. So making $500,000 on dividend, you pay 20% in taxes. Making $500,000 on wages, you pay 37% in taxes. So we, the middle class, because we tend not to have money invested in the stock exchange, we end up paying 37% in taxes. And the billionaires pay nothing. That's why you need to pay attention to how much taxes you pay and the tax loopholes. Bottom line, if you have any money to invest it in securities and in the stock exchange, in something secure like mutual funds. The IRS will reward you by lowering your tax base. You got it.